Good morning everybody and welcome to this European session on Friday 13th of September. Hope you guys are all well and hope you've had a great trading week. It's been a bit of an interesting trading week, hasn't it? Because it's been quite different to the trading weeks over the past several months beforehand. And we did highlight at the beginning of the week that this could be the possibility because of all the economic data that is coming out and how the market responded the week before, where we had a lot of trend reversals, we had a lot of big themes coming to an end. And the reason for that is because a lot of the economic announcements released this week were just as expected. So when it comes to market news releases, economic data, we have to remember that a lot of it was already priced into the market as institutional analysts and traders already build positions ahead of time based on these things. So during these type of times, market volatility can be quite low, a bit choppier, with trades taking longer to move in a certain direction. And the volatility of the market will always change from low to high, so it's important to be prepared and be able to trade through these different situations. And in low volatility situations, we follow the technical picture, but we keep the risk low and keep it a bit more shorter term. So through all my years of trading, this is the biggest thing I see. I see a lot of beginner retail traders, they want to be short term, okay, but then they miss out those really big long-term moves and then they regret that, oh no, I missed out that whole move because I took a small profit. But on the flip side then, a lot of retail beginner traders, they want to get those really big long-term moves, and then what happens is they're waiting for them for so long, they haven't appeared and they missed all the shorter term moves. So in this instance, we really want, as traders in the financial markets, we really want to be able to adapt to what the market is doing. You know, we want to be short term when the market tells us to be a bit more short term, low volatility. We can get some nice moves of technical levels, but maybe they're not going to go as far or as long. So that's great. If we understand that's the market situation, we can adapt. But then also, if there's some really big themes, like fundamentally led narrative themes, we also want to be prepared to say, okay, well look, maybe I can get a bit of a higher reward to risk here, okay? Maybe this market can trend a bit longer because there is a fundamentally led narrative on why everyone's buying or selling it. And that is not necessarily a beginner trading methodology, okay, but if you are turning up every single day, every single week, following your setups, following your plan, then you'll naturally pick up this information. You'll naturally learn how to trade through these different situations, and you might not notice it the first time or the second time, and you might not adapt to it the first or second time, but of course, if you are trading through these situations over time, then you start to build up the experience on how to adapt to those things. Of course, I'm here to support you guys as well. All the coaches inside of Smart Chart are there to support you as well, to help you to do that in your trading plans. Of course, you've got the live trading webinars every single day as well to support you guys in understanding what's going on in the market and how we're sort of trading and what we're doing and why we're doing it. So make sure you're utilizing all the resources available to you, and you're constantly updating your trading plans with how the markets move and the new learnings that you're receiving from trading different markets. So this week, been a bit quieter than compared to previous weeks, but we know that was probably going to be the case. We had some big trend reversals a week before in the big themes that we had been trading, with like the US dollar weakness coming at technical levels for a reversal. And then we had all these high impact news announcements coming out, which were as expected. Now, whilst this week might have been a bit more lower volatility, we kept it a bit more short term, we kept the risk a bit low. And next week might be a bit different actually, because just looking at the week ahead, and we'll look at some trading opportunities the trading floor have highlighted for today, because there's still some things going on, but next week becomes quite interesting because we have Tuesday, the Canadian inflation report, US retail sales numbers. These are big data points for the Canadian dollar, US dollar. On Wednesday, with the UK inflation report as well. Again, inflation is so important because it determines interest rate policy set by central banks. We have the FOMC press conference where the Federal Reserve are actually expected to cut interest rates 25 basis points, but there's been a lot of talk of will it actually be bigger, maybe a 50 basis point rate cut. So it could be quite volatile because there is a bit of uncertainty on the degree, the extent of that interest rate cuts. Thursday, Australian employment data. We've got the Bank of England official bank rate, interest rate decision as well. So again, there's a bit of a mixed opinion. Most analysts are forecasting at least one interest rate cut this year from the Bank of England, but some people are saying that the Bank of England are going to cut interest rates twice this year. So again, there's a bit of uncertainty there, which can cause a lot of volatility and a lot of movement, which is obviously we want to be trying to be prepared to trade for that if we can. Okay, and then Friday, the Bank of Japan press conference. Okay, so some big data points coming up there next week, and of course make sure you're tuning into those webinars next week as well, and see how we can trade these things if there are any opportunities around them. For now, let's dive into smart charts and let's see what's been going on in the market. Okay, so first of all, let's get a quick update. So in some of the medium to longer term positions we've highlighted over the past few days, so we took profits on dollar Swiss, we took profits on euro Swiss, we got stopped out on euro Canadian, and we still have euro New Zealand running. Okay, those are not all the trading opportunities that have been available throughout the week. We've had some really good ones, especially in the yen pairs. If you're a fast time frame trader, attending the fast time frame live trading webinars, there's been a lot of things there on those yen pairs, and that's where a big theme has been on the faster time frames. But on the medium to higher time frames, that's the things that we've focused on in these very short webinars that we've had together. So there's a couple other things that we're looking at as well, and euro pound could be an interesting one, because on top of what Smart Charts has found here on this T-wave strategy, we can actually see that the turning points of the market are getting higher, and we can see that we've got these lower high and lower low cycles. And why are these important? Well, it's basically telling you that, look, sellers drove the market down to the low point, bit of profit taken from the fast time frame traders, which drove it back up, but then the longer term traders thought this is a good point to sell it at a high price, and they kept on selling beyond the low price, and that attracted more fast time frame traders to keep driving it beyond this low price to make the lower low. Then we had a bit of profit taken from the short term players, which drove it back up, but then the longer term speculators still thought this is a good level to sell this at a high price and kept on selling beyond this low price. So we know from our day one learn Forex work how the market works, combination of institutional speculators, the longer term ones, short term ones, and the best trends are going to be where you have your longer term speculators and algorithmic speculators, the really short term ones, both moving the market in the same direction, and that's what creates the trend. And if all those institutional speculators of different styles are building positions in the market, there must be a fundamentally led narrative. You may not know what the fundamentally led narrative is, but of course it's going to be there acting as a driving force. We did highlight what this fundamental narrative is. We did say, look, by the end of the year, it's forecasted that the UK will have the highest interest rate. Even though every central bank is cutting interest rates, UK will still be the highest one, so we'll probably see a bit more strength in the British pounds, okay, which is why euro pound is pushed lower, which is pound strength, because as this exchange rate goes low, the euro is weakening, the pound is strengthening. So we know why we had that fundamentally led narrative. And there is still a chance of price getting towards these low points here, where then maybe it might reverse and exhaust. So there is potential for price to push a bit lower. And we have been pushing back in this phase 2. And what you may notice is, if you look at some of these phase 2 moves on many of the markets, you can see they're quite choppy, aren't they? Compared to these past phase 1 moves. Look at these beautiful just profit taking cycles, right? High momentum, but here look, it's all been a bit choppy, isn't it? So this is why we've been highlighting lower risk. If you think about it, there hasn't been many markets with the direct lower low, lower high cycles, higher high, higher low cycles. We've been dealing with more first higher low cycle of a trend, positional trades, trying to trade a positional trade before the trend has begun, which is why we go for lower risk and high reward to risk if it's there, to deal and manage with the probabilities of that. And you probably be dealing with more ranges, okay? Really the clearest trends are mainly been on the yen pairs on the faster time frames. So in this instance, that's what we've been dealing with. But we haven't really done anything with Euro GBP. It has come into the moving average zone where we know we like to trade, because look, sellers have been, buyers turned up here, it broke through, sellers turned up here, maybe they could turn up in this zone again, all right? But we haven't done anything because we're waiting for price to get into a level. But we do now start to have price coming into some interesting levels. So first of all, we do have this angle of price here where sellers have turned up before, so this could act as a bit of an area where maybe sellers could turn up. And also on top of that, you can see that we have this high point here. So this high point here broken through maybe could act as a level of resistance, right? Because it's been a turning point before in the past, and actually it's been pretty significant historically as well. You can see that we've had a few bounces off them. It's sometimes short term, sometimes long term, but there's obviously something going on there that we do want to incorporate. The key though is that there's still a chance of sellers taking control of the market up until this low point, all right? And that's important. Our target level is not all the way out here somewhere. It's achievable. It's before these lows, before where the market might actually turn, all right? So on top of what Smart Charts has found, and really the sweet spot is utilizing the power of AI, algorithmic technology, and then putting your own understanding of what's happening in the market onto it as well, okay? And that way we've got leading and lagging tools both combining together. That's always going to be the sweet spot. So on top of highlighting the opportunity, it also helps to do the most important part, which is risk management. If we click the sell icon, populated entry price of the blue dot, stop loss of the red dot, target the green dot. These can all be adjusted according to your own user preferences. So in this instance, some traders might just move their stop loss a little bit higher, and just to get above this actual high point here, which could be the end of the phase 2 move. And if you are adjusting stop losses, then just readjust your reward to risk and just make sure it's still valid and it's still achievable, which in this case it is. So on top of that, it'll also do the risk management calculations for us nice and easily, and then of course we can just set the expiry of a current bar close and decline or accept the trade. Great. Now, there's also some things going on in stock markets as well, and we're looking at the Stocks 50 on the market breakout strategy, and we've had a bit of a decline in some of stock indices, okay, and many of them are trading on the first time we're in the moving average zone. All right, now as a beginner trader, you don't tend to trade in the first time in the moving average zone. You wait for the confirmation of buyers or sellers turning up, and then you trade from the second, the third. But that's because you're trading high probability, high momentum. You need a higher success rate when you first start trading. But there are some occasions where we can trade positional strategies on the first time on the moving average zone, but we tend to lower the risk and we tend to go for higher reward to risk in that situation. So in this instance here, what's interesting is we're coming into the moving average zone, and we can see that sellers last time in the downtrend did actually turn up in the moving average zone before and drive it lower. And so we're looking for this sort of same kind of situation to develop here, all right? We also like the fact that you can see that price right now is a bit rangy, okay, which can be quite good because, again, you can see the market was a bit range-based there when it got into the moving average zone, got to the top of the range, got to the top of the moving average zone, and sellers turned up. So maybe there is a chance we could see history repeat itself. Okay, so we'll be looking for this kind of situation to unfold as well, and there may be a case we could get some weaker stock markets developing. GDP growth has been cut by many central banks. We've highlighted that through the webinars, but a lot of that has been expected, so it's not like a really big theme to be focused on right now, but it's something in the back pocket we'll keep an eye on, right? So on top of what Smart Charts has found, again, it's also going to help us do the risk management work. I'm clicking the sell icon here, populate an entry price of the blue dot, stop loss of the red dot, target the green dot, and do the risk and portfolio management calculations, which can all be adjusted according to your own user preferences. This is a positional trade. The trend isn't confirmed, so then we would go for lower risk, and we would also see if there's a potential for higher reward to risk. And if price does break this low point here, then it could lead to some further downside. So then we know that, look, there are some levels of support kicking in around here, so we want to try to squeeze out a bit more of a higher reward to risk there. You can see nearly a 2-to-1 reward to risk there now. Okay, so we also set the expiry, so on this particular strategy, end of day expiry, just to give it a bit of room, give it a bit of space for sellers to turn up and continue a move. All right. Okay, so look, still plenty to focus on throughout the day. Make sure you're still turning up, following your plans. and listening to what the market tells you to do. Of course, at the end of the week, we like to do end of week reviews, compare our live trading results to the back testing results. So make sure you're utilizing that cognitive trade journal that we go through and learn Forex. That's actually where I spend most of my time. I spend most of my time reviewing my performance, improving for next week, and still every single week just building the belief and confidence in what I'm looking for, what the market's telling me to do, and get the trust in the plan that we use to navigate the market. All right. So have a fantastic trading day, have a fantastic weekend, and I'll see you next time. Bye for now.